Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 23rd of April. So I've seen some nice moves in the market this week. It's been helped the volatility returning to the S&P 500. We saw some pretty good swings this week, which really made the currency market start to move a little bit. So we'll jump straight into the chart and see if we can identify any opportunities for today and early into next week. All right, we'll start out here with the Aussie USD. You can see that it's been in a bit of a zone that hasn't really broken through the moving averages yet, and it reached the highs there of 78. We've had that line drawn there for a little while because it's been a pretty good resistance point most recently, and it touched it there only briefly before it sold off and came back down to the moving averages. Now, it's an interesting one because realistically, you've got to go to the smaller time frames to really understand the story here, but it's really leveled out. It looked like it was going to be a head and shoulders. That did fail, and then we had some sideways movement. Now it's gone up and tested it. The 4-hour one is very, very clear. We had this amazing pattern here at that resistance point that we've had drawn for a little while, which is an evening star. You can see there that the star pattern touched the resistance perfectly, and that pattern played out really, really well. But what it has done is you can actually see now that we've got a head and shoulders pattern on a 4-hour chart. Now, it hasn't broken yet. The only concern I've got about this particular head and shoulders is that the neckline is right on a very strong support level. So I'll draw what I'll actually do is I'll draw the neck. That's the neckline that we're talking about. That's the neckline that we've got in question on this head and shoulders. Okay, so really it's a beautiful head and shoulders, no question about that, especially when you see that coming off the resistance point with a shooting star pattern. So you've got that really in its favor, but the problem we've got is that if we overlay that neckline with a horizontal line that we can see here, you can see there's very strong support. So what that does, it effectively makes that neckline quite a bit harder to break. Okay, that's the only thing you got to be a little bit concerned about. Now, if it does happen to break that neckline, the pattern we would measure is the full length, of course, of the head and shoulders. Okay, we can project that out and bring it down, and that goes right into the lows here. You can see another support and resistance zone. So you can see here, this was a good support zone, and it would stand to reason that that would be a very logical place for it to go, which is around that sort of 76.20 level. Okay, so look, a decent move. I would be definitely waiting for that close though. So if any head and shoulders pattern, obviously we need a candle close below the neckline to actually make this take effect, and our take profit for this particular pattern would be in this zone, which is in line with what we're looking for. The stop losses, of course, above the shoulder. So a really nice pattern, one to watch out for, and this is why I think it's important to, when you look at it on a daily chart, obviously if we blow it right up, all we see is consolidation and a bit of a sell-off. But when you take it down to the smaller time frames, that's when you can see the really good patterns emerge. So keep this one in mind, set your alerts for it, but a little bit more work for it to do. It needs to close below that neckline to make this a valid trade, but it has got a very logical take profit and a very standard stop loss on that particular pattern. All right, we'll move over to the US dollar CAD now. This one, this line that we drew over the last few weeks, you can see it's still in play. It tested it again early this week or in the middle of the week. You can see it tried to get past it, broke down and sold off again, and price finds itself below the moving averages again. For me, the MACD still is playing the game in terms of wanting to go up. It seems to be really holding here. You're talking about many, many weeks now of consolidation in this zone. Yes, it's struggling to break this zone, but we need to look at the bigger picture, and I think that it doesn't want to go much lower by the looks of it. It's really holding up at around these levels. It's failed to test the absolute low of the 124 area, which it did basically, at the start of March, really, this year. It hasn't been able to get down there again, and until it does, I'm pretty comfortable scalping this one to these resistance zones. You need to go to the smaller time frames, of course, to see that, but when you do get a bit of a move up, the price needs to break up above these moving averages here on the 1 hour. MACD is giving us that inclination that it might do that. If we get that and we get a lightning bolt, so a series of higher highs and higher lows on a 1 hour chart, we can be comfortable taking it into that resistance zone again. So it's one of those ones where it's still a scalp at the moment. It's not giving us any clear direction, but if we do get a scalping opportunity, we've got a very clear target for it to go to if we get the pattern, which is the higher high and higher low sequence. All right, we'll move on to the US dollar yen now. So this one's been nothing but weak for the last several weeks now, really. This is a daily chart. We've got basically 3 green candles, and even they were not that green, to be truthful, over the last nearly month, if you like. So what you want to be careful of now is that it's easy to say, well, it's just going to keep going, but it has come down very, very hard, and it is now at that role reversal zone that we thought it would reach, which is that 107. 180 level. So very, very strong level for it. You can see here on a daily chart, it was support there. It was resistance right through this area here. It was resistance again there. It finds itself there. We would expect that it would find some level of support here. The MACD doesn't look pretty. There's no question about that. It's about to go into the zero zone, but that's just a consequence of, about 15 or 16 red days out of the last 20. So realistically, it's no surprise to see those moving averages converge on each other. But yeah, that said, we've got to respect the support zone. So I'd be trading this one with a lot of caution around this level. If you want to short it, I would be waiting for at least a daily close below this level, a solid daily close for that, before I look to go any shorter on this. Just be aware that it is a very strong support zone. Failing that, I would be probably looking for long scalping opportunities from here. I'd be taking it down to the 1 hour and 4 hour time frames. We'll take it down to the 4 hour first. You can see that the MACD tells a different story on this one. It's starting to rise up because we're getting a little bit of consolidation around this area. And also the 1 hour is, again, you can see all of the support bottoms. MACD is telling the same story again, that it's starting to rise. The moving averages are starting to go in the right direction for a potential bounce off this level. Now, yeah, the obvious level to go to is, it's only not very far away. It's a 108.50 level, but that was the previous support level. So generally speaking, you see these gravitate to those zones once they do form a bit of a base at this level. What you need to see is a change of trend, of course, a series of higher highs and higher lows on a 1 hour. That would make the 1 hour candles close above the moving averages here, which would give us a bit of a point up towards the fact that the 108.50 would be the target that we're probably going for here. So yeah, really good target. Again, also it's the 200 moving average is right there for it on the 1 hour as well. When you go to a daily, you can see that that was a very strong support level on a daily chart, and it was support right through here. The 108.50 is a very important level as well. So it makes a lot of sense to see it potentially get up there, rebound, and test this level again. But definitely only a scalping opportunity. I'm not convinced it's going very long anytime soon until it breaks some key levels, but just trade that level for now, and I think that could give us some good opportunities. Okay, we'll move on to the dollar index now. Now, this is one that's also found itself at support. You can see here that it had a bit of a sell-off pretty much in line with what the US dollar yen has done. So they're basically moving in sync, which doesn't always occur, but this has found itself at a very strong support. The 90.90 level has already been drawn up. We've talked about it several times. You can see it's touched it twice in this last week alone. Very strong role reversal area for it. Wouldn't surprise me to see it bounce off this level. It's probably what we're looking for. Again, MACD looks a bit ominous, but yeah, if we go to the smaller time frames, you're looking for that breakout change of trend. The MACD is a little bit different on these ones, so the price action is starting to look a little bit more favorable. Ideally, we want to see a change of trend, obviously. On a 4 hour would be great. A series of higher highs and higher lows. Don't necessarily have to actually long the US dollar index. You'd be looking at shorting opportunities on the euro, which we're going to touch on in a moment. But yeah, that's what it's a very strong support level. No question about that. It's been very, very good on the way down. It's given us really good trading opportunities if you were trading the euro's inverse, which is what it is. But again, now we've found it at support. So if you want to continue the short, we must get a daily close below the 90.90 level. If you don't get that, it's going to be very difficult trading, because you're basically trading into a brick wall without any knowledge of when it might break. Ideally, you wait for the break. So the more logical trade is to wait for a change of trend and start to look for the moves up to around that 92 again, which would be the ideal move. That will mean good things for the euro, especially if you are looking for a shorting opportunity. So again, this one finds itself at a very, very important zone. You can see that this week has been a very, very interesting week. Apart from the big breakout early, you can see that the indecision has been real this week. These are daily candles, so it's pretty big indecision candles, 2 in a row there, where effectively price didn't do anything from the buy or the open and the close, I should say, but the movement in between was quite large, and you can see a big negative candle there. This is one that you've really got to watch. It's at a very, very important zone, no question about that. The 120, we know it's important anyway. It's a very important round number, but this is one of those ones where I think it probably looks shorter than it does long, mainly because of what the dollar index is doing. So realistically, we know that we've got a very strong area here. We need to see that area broken. So for mine, we need to get a daily close below the moving averages and below this 120 zone. If we get that, it's looking pretty good for the next short down to around that 1850, which is around this level here, which were these previous highs. So a pretty logical target to go for. It's not a big trade. It's only a scalp again. You're only really scalping this one. But again, until we get a really clear breakout direction, and going with the volatility that we've seen in the stock market this week, we might have to wait a little bit longer for that to happen. But when it does, it should give us some good trending opportunities. But for now, we scalp it in between the zones that we know seem to work and that are gravitating towards it. We can see that price action is definitely indecisive now, so we need to wait for a clear break of this zone before we start looking for long opportunities or short opportunities. If the long opportunities are going to come, of course, if we get a change of trend on a smaller time frame and we see a series of higher highs and higher lows. But given what the dollar index looks like, I think my preferred trade here would be a break of that 120 zone. All right, we'll have a quick look at spot crude. We didn't miss this one last week because it did break out of that zone and went up. As you can see, it had a nice move up. It's found itself now at that little mini support zone around the sort of 61.50 area. The 20 moving average is propping it up. It probably should have bounced already by now. I would have liked to have seen it do a little bit more. It had a good move out initially, but it hasn't really continued on, and it's pulled back. It's given back probably 50% of that gain, which is, it wouldn't want to go any further, let's just say that. It would want to be turning around here and continuing on. I wouldn't get involved in this trade until it actually broke to a new high again. It needs to break above this level here before I would get excited about going long. If it did that, then we've got the confirmed higher high, higher low sequence on a daily, and then it can definitely push up into the 67 to 67.50 zone, which is probably the logical target. So if it gives us the technical entry to go, that's a good target to go for, but it needs to do it. It's got a bit of work in front of it to do that. It's given back a little bit too much, and it really needs to rebound from here to make this a valid trade. Otherwise, it's going to find itself hovering in this zone again with no clear direction. So it's got a little bit of work to do, but if it does make a higher high at this point here and closes there, it opens itself up to reach the new highs that we had here at around that sort of 67 area. All right, the last one we will have a look at is the S&P 500, the all-important index. Now, this one's had a very, very indecisive week. You can see we've had very equal candles. We've had basically 1.5% or 1% swings either way, and the daily trading in between has been pretty solid. But what is interesting about these last three candles, not including today's, is that you can see that each of them were full-bodied candles pretty much. There wasn't a lot of wick action, so there was a lot of determination on the sellers and buyers' side. So it makes for quite a volatile market. I think it's a confused market, but it's not one that generally you see dojis for. Usually when you're seeing doji candles like this, that's where the indecision is. But these ones, each day has been a very strong conviction either way. The sellers definitely won this day, the buyers won this day, and the sellers again won this day very clearly. Like I said, very big-bodied candles, which generally means that we're probably looking for a breakout. I think something's going to happen sometime soon, and I think either way, whichever way it breaks, we're probably going to see a decent move out of it. So it's one that you need to actually wait for the evidence of. I'd like to see a daily break. Ideally, in a perfect world, the more logical trade here is probably the short. We're going into the sell in May. We've obviously had the a lot of reporting in the last week and a bit, so it's had its chance to go up. Hasn't really done it. Sell in May is fast approaching. That analogy that everybody uses. It works surprisingly well. You'd be surprised how often May is a very, very weak month. So given that the market's at all-time highs, it wouldn't surprise me to see a bit of a pullback and a bit of a sell-off. So that would be my preferred trade. But for that to happen, of course, we need a daily close below these levels. So we probably, in a perfect world, you want to see a daily close before below the 4100. That will mean it's below the 20 moving average as well. And then we're going to look for the smaller time frame changes of trend. A 4-hour change of trend, lower high, lower low sequence would probably get that ball started. And that could really open it up to a short down to that around that 39.80 area, which would be an ideal move. That would be a pretty good 100 to 120 point move, which is statistically pretty strong, really, but given that we've got a role reversal zone here and we're seeing a lot of weakness at these all-time highs. So definitely good trading, but one to set your alerts for. So I hope you've been able to capture some of these good opportunities that we've had this week. It looks like the party's about to begin. I think the next few weeks are going to give us some really, really good direction, and we should start to see some really good trends start to take place. So we'll keep an eye on those. Have a great weekend, and I look forward to seeing you all next week.